Good afternoon, everyone, and welcome to Stock Market Today for Wednesday, April 16th. It's Alissa Coram here. And today, stocks getting slammed with Nvidia getting some bad news. So, here to discuss more about today's market action is my colleague Ken Shreve. Ken, what do you have for us today?
Yeah, I don't know that coming into Wednesday, we were expecting a 4% decline for the NASDAQ, but a tough day on Wall Street, Ali. Three stocks to look at: Target Therapeutics in the biotech group, TGTX. Also heard from Abbott Labs this morning. Pretty good earnings report, but stock had a hard time. Got pulled down with the broad market. And finally, in the very hot aerospace and defense group, let's take a look at Loar, Loar.
Sounds like a plan. We'll get to those stocks. But first, let's take a look at the major indexes. As you mentioned, the NASDAQ today getting hit hard, down about 3% by the close, a little over 3%. Meanwhile, the S&P 500 down 2.2% in today's session. The Dow down 1.7%, and the Russell 2000 down 1.4%. And the open wasn't too terrible, Ken, but it seemed like the selling just picked up throughout the day. A little bit of relief into the final minutes of the close, but still, as you mentioned, a pretty big down day across the board.
Yeah, pretty big down day, but encouraging to see that buying that you just pointed out late in the session did cause the Nasdaq to lift off its lows as it came pretty close to that round number of 16,000. So we'll watch to see if 16,000 can hold in coming days. This was the let's see, I think this was the eighth day of a rally attempt for the Nasdaq Composite, and even though let's see if I counted that right.
Yep.
Yep, eighth day, and you can see that that low from 8 days ago is still, very much intact. So even though we were down sharply, the Nasdaq is still, still trying to rally here. So we'll see if 16,000 holds. It really had a tough. With the Nvidia news, really, cast a pall on the market. Basically, their H20, their lower power H20 chips, they thought that they were going to be able to make some money selling those to Nvidia, but
To
these
China.
sorry, to China, but the tight export controls, resulted in Nvidia saying they're going to have to take a $5.5 billion charge. So they're essentially writing down the value of these H20 chips, and they're just not going to contribute to the bottom line and top line as robust as initially thought. So this is a big problem because we talked about, this isn't even a tariff issue. This is just an issue that Nvidia has been dealing with, having to design lower power chips initially by the Biden administration. So this is potentially problematic because when you get a write down of this size, it obviously is going to weigh on earnings and sales going forward. Nvidia's been on a sharp downtrend for a while, probably pricing in this slowdown, but we'll see if there's more downside here.
Right. And NVIDIA wasn't alone in the chip sector. There were others falling in sympathy on the news. The SMH sector ETF here representing the chips down 4.2% on the day. And Ken, want to get your thoughts on levels to watch here, updated levels to watch for the NASDAQ, in addition to 16,000, which you mentioned, and the ultimate rally low. We had that upside reversal last Friday. It wasn't a follow through day, but I think that low for short term tactical traders was a notable level. We did undercut it intraday. Looks like maybe we barely squeaked a close above it on the NASDAQ. So, but definitely testing that short term area that was somewhat encouraging, but we still have this brick wall above our heads with a lot of resistance here in the short term.
Yeah, when an index falls as sharply as the Nasdaq did, sometimes it's a challenging road back, and we're seeing that 8 days into a rally attempt. We had been holding pretty well, but we had a higher volume decline. Volume wasn't huge to the downside, but it did pick up from yesterday's level, so it was a higher volume decline. At this point, yeah, I think that we'll just see if Nasdaq can hold 16,000 here. It's obviously a headline driven market. Jay
Right. You
Powell
had Powell
also.
today. Mhm.
Yeah, Powell spoke today, and he acknowledged the potential for some, inflation as a result of these tariffs. So, between companies talking about, weak earnings visibility and tariffs and inflation and the Fed, you just get so many headwinds. Sometimes it's just a really difficult market, and that's what we're in right now.
Mhm. Right. And we know the market can move on positive tariff related headlines too, with that 12% move from the NASDAQ last week on the news of the 90-day pause for a lot of those higher reciprocal tariffs. So it does seem like this tariff theme all year long so far has really been the defining theme of the market, for better or and mainly for worse in the last couple of weeks and months here. So it seems like that if the Fed's not going to act and is waiting on the dust to settle here, then it seems like materially positive tariff headlines could be what it's going to take to get the market out of this funk.
Yeah, that's right. But we saw when that Nasdaq rallied, 12%, it was quite volatile the next day. So when you're in this just period of excessive chop, you can feel, pretty good one day about going long, and then the next day you're feeling not so good about going long. So you have to take the positive headlines when you get them, but you also have to realize that. Obviously, the market is pretty concerned here about a slowdown for the U.S. economy and the possibility of a recession. So, and I don't know too many people, including Powell, that is saying that he's not saying that we're headed for a recession, but he again acknowledged today that inflation could stick around and that could hurt the economy.
Right. Yeah. A pause definitely is not the same thing as actual resolution. So we'll have to see if any tariff deals can be made and what those look like. And in the meantime, like you said, what the impact is on the overall economy and for publicly traded companies that are trying to weather this storm.
Yeah, and like I said, earnings season too is just we're just at the early stages of starting up here. So probably going to see some earnings turbulence as well. But as we've been saying, and in recent shows, we know the signs to look for. We haven't seen it. We haven't seen it yet. Still seeing some decent setups out there, but you're just dealing with a market tide that's still flowing pretty negative here.
Yep. Okay, quickly looking at the S&P 500, we have that 5500 level ahead of us as a resistance area in addition to that shorter term 21-day moving average. We haven't undercut that reversal day low from Friday, but today's sell-off not a good look for the S&P 500. I want to check in on RSP. Did that fare any better? Down 1.3% versus the S&P's 2.2% decline, but still not a good look here for the equal weight broad market, Ken.
Yeah, breadth has been pretty weak for a little while here. So even though RSP held up a little better than the S&P 500, it is still we sometimes look at the the 10-day moving average of the advanced decline line for the Nasdaq and the NYSE, and you can see for the Nasdaq. Um, uh, oh,
GMI
GMI. There you
B,
go.
actually.
B is
I
the
was,
Nasdaq, yeah.
there we go.
So it's been trending lower for
Mhm.
for quite some time. So the breadth has been weak for a little while, and also on the GMIAA, which is the NYSE, um, breadth still on a downtrend, trying to come out of a downtrend, but just a lot of underlying weakness in
Mhm.
the market. Really, typical action in a bear market. So we've seen this script before, and right now the screens are just not. Not looking all that great in terms of actionable opportunities. So you just have to listen to the market's message and be patient.
Yep. Okay, well, let's take a quick look at XLF, one of the sectors of note today, Ken, as earnings season continues to get underway here. The financial sector ETF down 1.6% on the day, looking like it's getting rejected at that 200-day line.
Yeah, we're seeing more of this, especially after today, whether it's individual stocks getting rejected at their 50-day lines or XLF, which has been lagging badly. That was up for three straight sessions starting last week, and then it fell. Volume wasn't huge, but it did pick up the pace from the prior session. So resistance at the 200-day moving average here. Financials still look challenged.
They sure do. Okay, and let's check in on the 10-year Treasury yields, seeing this come off here a little bit today. So now we are essentially back at levels that we were seeing around April 8th. After a short term spike here, clearly we're nowhere near the levels we saw at the intraday lows on the 4th of April. But it does seem, Ken, like we are starting to get back into this range where we were previously for a lot of February and March, calming down a little bit after some alarm bells were raised, especially at the severity of this uptick in recent sessions.
Yeah, well, there was a lot of reasons, a lot of people questioning why bonds were being sold, who was selling them, and that's why the 10-year yield raced higher. But now you've had quite a lot of bond buying. Unfortunately, people may be buying bonds for again as a safe haven trade, just worries about the economy, worries about corporate earnings, especially in light of what Nvidia had to say again. So would be nice to see this 10-year yield just start to calm down a little bit, maybe hold support right where it is now. And but you can see there's been a lot of excessive volatility in the bond market, and for good reason. The bond market is really just as confused as the stock market is about the underlying health of the economy, and if we are going to get a sharper than expected slowdown. So just a lot of uncertainty out there. Um, yeah, just so many headwinds. It's just uh, difficult to navigate.
It is, but at least a little bit of improvement here. So we'll have to see if that can continue. We'll keep
Yeah.
tabs on it. Okay, let's go to TGTX. Ken, this is TG Therapeutics. Tested a buy point in a recent pullback, holding up well here. Your assessment.
Well, it's a name that we're still watching for the leaderboard model portfolio. It was a pretty sharp break of the 50-day moving average several days ago, but the stock rallied off lows and closed up near its high, and it's back above the 50-day line here on a really tough day for the broad market. I mean, TG Therapeutics was down 2%, but you can see it was a pretty orderly decline. It closed off lows here, still holding in a buy zone here from that prior 36.84 entry. So for a biotech stock that is profitable, and they specialize. Briumvi is their main drug that treats relapsing forms of MS. So you can see the annual earnings outstanding, revenue growth really picked up the pace in the latest quarter. So again, another biotech that is profitable. Good top line growth, and still a pretty good pipeline here. So still a good setup in this market, and showing a lot of strength here.
Yeah, a compelling medical sector name for the watch list. Now let's go to ABT. This is Abbott Labs out with earnings this morning. Shares up 2.8% on the day, but we did fade off of intraday highs and closed below the 50-day line, a level that it was trying to clear in today's session, also hitting resistance around the recent highs from late March, early April. Ken, and I know that's a level that you were keeping a close watch on in today's session.
Yeah, well, it was made a nice move early in the session. I mean, the numbers were pretty good here. You can see revenue only up 4%, so this is not a super fast grower that we typically like to focus on. Lots of single digit. Revenue increases, but inside the report, this first quarter report, even though overall revenue was only up 4%, their medical device sales were up 10%, made up pretty much half of total revenue. And then they are pretty busy in the continuous glucose monitoring market for diabetics. So they compete with Dexcom and others. The sales of glucose monitoring devices were up 18% to 1.7 billion. So I think the market was kind of focusing in on strength there. In terms of its reaction today, obviously the broad market pulled it down. I think overall it was a pretty good response to earnings because the stock did close higher. Weekly chart here, you can see it's still trying to grapple right at that 10-week moving average. But we've seen healthcare stocks, some of these drug makers acting well. You still want to be paying attention to healthcare here. Not so much AI stocks and a lot of these
Yeah.
former technology leaders, but look into different areas of healthcare. I think the numbers were really solid from Abbott this morning, and it's still setting up here.
Yes. Okay, and last on our list, we want to check out a relatively new issue in the aerospace defense group, which is ranked number 9 now out of the 197 groups that IBD tracks. A mild down week shaping up so far for the stock after a large move in the prior week, up 27%. So down about 2.5% 3 days through this shortened trading week. So maybe a handle forming here with this little pause in a new name in a highly rated group, Ken.
Yeah, it's a new name, new issue. You can see it became public last year in the summertime, and it's been a great performer. So we have this on the leaderboard watch list. There's broad-based strength in this industry group. Next week, we're going to hear from Northrop Grumman and Raytheon, also tracked in the aerospace and defense group. This is just a manufacturer of aerospace and defense components, and really like the accumulation as this stock started to rally off lows. You can see a lot of heavy volume. Even on the weekly chart, you can see three straight up weeks where volume rose each week. So that's really what you want to see as the stock starts to approach a prior high. Still basing, but this is a pretty good looking setup here. We like new issues. We like stocks that are still in the early stages of a possible move. Composite rating of 99 here alerts us to a lot of positive qualities from a fundamental perspective. So glad this is on the watch list, and we'll keep an eye. And if we can get a follow through day, we can get some sort of confirmation of a new uptrend here. We'll keep a close eye on Loar, and some of the biggest gainers in the early stages of a new uptrend tend to be newer companies still in the early stages of a move. So we think Loar kind of fits that bill, and we'll see if the market's going to let
Mhm.
this one go.
Absolutely. All right, Ken. Well, we appreciate all of the updates today. Thanks so
All right,
much.
you got it.
And thanks everyone for tuning in. That is it from us for today, but it's Wednesday, so we do have another podcast episode lined up for you with host Justin Nielsen live at 5 p.m. today on our YouTube channel with guest Tom Basso. So make sure you head on over and check that out. And we'll also see you tomorrow morning on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream starting 10 minutes before the opening bell. And just a heads up, it is our last show of the week on Thursday for both IBD Live and Stock Market Today, with the market closed on Friday for the Good Friday holiday. So we will see you back here tomorrow, everyone. Thanks so much and see you then.